Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenarios on the weekly time frame, where the first one is a bigger impulse to the upside, 1, 2, 3, 4, 5, currently working on the yellow 3 with the internal 5-wave green count, 1, 2, 3, 4, 5. Most common target for your wave 4 is the O5 on the chart, 53.3k, and the invalidation is 49.3k, and we're looking for continuation of the trend. Most common target for 5 is between 80k and 105k, which is a very big target area, but based on the local structures we can get more specific, as eventually on a daily, 4 hour, 1 hour, 15 minute we will also have target areas, and then we know more precisely where this wave 5 and therefore wave 3 might top out. After this wave 3, we're looking for a correction to the downside in a wave 4. An Elliott wave guideline is that a wave 4 of a higher degree likes to retrace to the price action of a wave 4 of a lower degree, which is the price action of the green wave 4, and that is what this box here represents. Then we look for a wave 5 towards the upside, and the same is true. It's a very big target area. Let's first wait for a 3 and 4 to be printed on the chart, and then we really start talking about the more specific targets for your wave 5. The second bullish scenario here only has one more push to the upside. 3 is already finished, we have a 4 and then eventually a 5. Common target for 4 is the 236 to the 05, taken from the low to the high of 3, 57.1k to 42.8k. The 0.618 here is your invalidation at 37.7k, and the target area for your wave 5 is between 80k and 140k. So in both of the cases we look for price to move towards the upside, and that's also true in this bullish scenario, which is by far your most bullish scenario. And there is two reasons why this at least should be considered, and there's actually one reason that goes against it a little bit. So let's start with that one. In a double 1-2, which you see on the chart here, 1-2-1-2, preferably both of your wave 2s are the same structure. Again, it's a guideline, it's not a rule, but you can see that this wave 2 here was a flat in an ABC, and here we have a zigzag. So those are different structures. Does lower the probabilities a bit for a double 1-2. But the reason why this scenario at least has to be considered is because here we have a very sideways ranging corrective structure in a wave 2, very shallow as well, moving to the 382. And so far this range here is also very sideways. Even though we have a flat here and a zigzag here, which is alternation, the price action itself is, as you can see, quite sideways. And if you think about an impulse, 1, 2, 3, 4, 5, then if wave 2 is deep, wave 4 has a higher probability of being sideways, and if wave 2 is sideways, wave 4 has a higher probability of being deep, and it's not really that deep. So therefore this is something to consider. And the second reason is, if you have an impulse 1, 2, 3, 4, 5, then the wave 4 of a higher degree most commonly retraces to the wave 4 of a lower degree. That's also an Elliott wave guideline, but as you can see currently we have not hit the white box, and therefore we have to consider this range not to be a wave 4. By all means, in all of the bullish scenarios, you are looking for price to move towards the upside and take the all-time high. And then once price moves towards the upside, we quite simply on a weekly time frame just have to wait and see what we get. And especially once price is moving into price discovery, we have to wait for a new range to form, because the new range will give us all of the information that we need. On the daily time frame, we have been keeping an eye on this zigzag to the downside, a simplistic ABC 535 structure. Wave B hit the 886, and the 886 is common for a wave B or a wave X, rare for a wave 2. Increasing the probabilities, this move to the downside is a wave C or a wave Y. The common target for your wave C is the 1 to the 1.236, which is hit, as you can see. Extension target the 1.618, giving you a target between 54.6k and 50.5k most commonly, and the 1.618 43.9k, which is less common. Now, by all means, in this scenario, we are looking for price to eventually move towards the upside, either directly or have one more low and then move to the upside. Pretty much depends on the local structure to the upside here. And a second bullish scenario here is the WXY that we've been keeping an eye on, where preferably this is your low. Now this scenario does have a lower probability because of the ABC inside wave Y, a zigzag where wave C only retraced to the 0.618 trend-based subextension taken from the start to the end of A to the end of B, which is a rare target for wave C. Locally, price has been moving to the upside on volume. We were looking for price to move to the upside locally and then keep an eye on potential signs of weakness, but instead we got more signs of strength, also represented by the green lines here, which are the bullish CVD divergences. So you can see here a higher low in price, lower low on the yellow is CVD, a bullish CVD divergence. There is absorption of market shorts with limit long orders, increasing probabilities to move up. Then we started ranging around the daily naked point of control. Again, more bullish CVD divergences. And then also here, a higher low in price, but look at yellow, lower low on the CVD. Once again, a bullish CVD divergence. Another reason to look for price to move towards the upside was the 886 here, taken from the high to the low, which increases probabilities to sooner or later take out this high. And what is common, and we see here as well, is after an 886 touch, price moved to the golden pocket and then continued to the upside, which was very nice. Now, so far, price has been moving to the upside here locally on increasing volume as well. So the best thing to do from an Elliott wave point of view is to wait for a range to form. We are currently at the weekly naked point of control, so we can observe the reaction in this area, but we eventually have to wait for a bigger range to form, and that range will give us all the information that we need. We do have some news today as well, 6:30 p.m. Central European time, so make sure you trade safe. And also on Tuesday and Wednesday we have some high impact news, so again make sure you trade safe. And if we then finally look at the probabilities of the different scenarios, then on the weekly time frame the probabilities are highest for the bulls and continuation of the trend sooner or later. Also on the daily time frame, in both cases we're looking at bullish scenarios because they are three-wave corrective structures, a zigzag and a WXY, and the probabilities are higher to still move up and continue the trend, either directly move to the upside or make one more low, doesn't really matter. And more locally, price at the moment is moving up on increasing volume, and therefore from an Elliott wave point of view the best thing to do is to wait for a range to form, because that will give us all the information that we need. And currently here we are at the weekly naked point of control, so let's see what price is going to do in this area. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.